All right, let's get started. It's my pleasure to introduce the facilitator for this session, Michael Singh. Michael goes by last name Singh. Singh is a teacher, coach, speaker, and author. Singh is a business owner himself and has more than 20 years of experience as a coach under his belt and 20 years experience in business prior to that. When Singh is not speaking at ICIC conferences, he works with business owners and leadership teams of small to mid-market companies to unleash sustainable growth for their businesses. Singh is the author of the book Rock and Sand, a practical insight to business growth. I'm going to put a link to Singh's webpage in the chat so you can see more of his experience and also contact him after this session if you would like to do so. Singh, thank you so much for volunteering this to facilitate this session. And I am passing my virtual microphone to you.
Okay, let's go. I'm going to share my screen. Hopefully you can see a screen that says, let's start with a simple poll. Good morning, good afternoon, good evening, depending on where you're logging in from. I feel honored and privileged to be able to share this time with you today. So to get us kicked off on what this is, I know you know the topic is about cash management and cash resiliency, but I just want to ask a simple question right here. And Oksana, if you could put up the poll and if everyone could just answer that question. And that'll get us set up.
For some reason, now the poll doesn't work for me. It worked in testing session. Singh, could you click in the bottom center on polls? Can you see that?
No, I don't see that. There it is, polls. Launch the poll. There we go. Everyone see the poll? There's 3 questions. What is the most important line on your financial statements?
I don't see the poll. I see the presentation.
People are starting to fill up the answers.
Good.
I hope everyone's seeing here. The answers are revenues, profits, and cash. You know, so many people think the bottom line is the profit line. But I guess what I want, if you're answering the question that cash is the most important line on your financial statements, you're in the right room today. The other, we're going to kind of convince you that maybe cash is the most important bottom line, or it's the real bottom line of your business. So if you see this, we have 55% say cash, profits, 12%, 26%, and 19% say revenue. So I'm going to end the poll. Everyone's leaning towards cash. And I'm going to move to the next slide. And this is a quote, and I want you all to think about this quote. This reflects back to the poll. Revenue is vanity, profit is sanity, cash is king. And whenever you're getting a little mixed up about what your priority is, I think what the thing to do is to say this little poem to yourself, or shout it out loud, or shout it to your team. Revenue is vanity, profit is sanity, cash is king. You know, revenue is real important because it's the top line. And revenue has to grow, but if revenue does not grow, or profit does not grow with it or faster than the revenue, you've got a problem. But the bigger problem is you can be profitable and not have any cash. You can have a lot of cash and not be profitable. You need to have the cash. Now, I want to give you kind of why what our talk is about today is cash is king. And as a think tank, we're going to work on, you guys are going to work on some things about what you can do to increase your cash, amount of cash you have in the bank today. So tomorrow you could go to the office, do these things, and you'll start having a better understanding of your cash and where you're wasting it. Some of you are going to go to a breakout room and you're going to work on some things about what you can do in the next 90 days. And then several of you are going to go into groups about how to change your business processes so that you can get the cash faster. Okay. So all of this is being done, or all of this is with the idea that to improve cash flow, that's what we want to do, and turn your balance sheet into a fortress. Okay. So that you can survive anything. I don't know how many of you have walked into this pandemic not knowing where their cash is, or all of a sudden feeling cash strapped, but I certainly did. But I was fortunate because I've become anal retentive about cash myself, and I realized where my cash was, and I've spent time working on that to make sure I have the cash to get through about anything, and I am. Why? I'm a strategy coach. I'm not a finance guy. So why would a strategy coach work with clients about cash? Well, we really don't want to. But here's the thing. When you're running on empty, strategy gets a lot harder. Okay? You need cash to be able to support your strategy. If you have cash, you can get a lot more done than when you don't have cash. It just makes it a lot harder. So often as a strategy coach, as we work with people, we end up getting to this, so how's the cash? Because you're going to have to change things, and change means spending money. That's why I'm involved in that. Now, I want to give you guys some confidence. I don't know what your background is. I'm going to share my background. I don't know really a whole hell of a lot about accounting. Finance, I don't have any expertise. I'm a history major. Okay. I haven't balanced my checkbook in 25 years. Okay. You do not have to have knowledge about accounting and debits and credits to be able to manage past cash flow. You probably have a controller or an accountant that does your books, and you can look at the information that they provide you and make good decisions based on that. And all of that is pretty simple and only requires, in my mind, back of the envelope math skills, things you learned in junior high or your freshman or sophomore year in high school. That kind of math. None of this requires calculus, doing integrals, or any fancy calculations. It's addition, subtraction, multiplication, and division. So don't feel intimidated. This is not necessary. And as you move forward, you're going to realize your bankers, you should not be intimidated with your bankers or accountants. It's not like they have anything greater than you on this. So if you want, I just want to throw this in here until we get to what's going to happen. If you want to connect to me, these are some links. I'm sure she's going to put some of these in the chat room, but there's my email address. This is the website of my company. It's called rockandsand.com, also the title of my book. I also have a website called School of Rock and Sand, and that's the link where there are online courses. And then this last link takes you directly to this course or the subject matter we're working on today, but it goes into great deal. It's an online course. And then at the bottom here is a code you can use to get that course and go through it with your team at a discount. So let's proceed. Here's our think tank task. We're going to move into 11 breakout rooms. Room number 1 is going to focus on looking at immediate ways to eliminate waste. There's going to be 3 rooms, one working on income statement levers. So one room is going to work on how to improve the income statement by increasing revenue, one by decreasing cost of goods sold, and then third is going to be expenses. Then a couple rooms, there's going to be one working on balance sheet levers, accounts receivables, inventory, accounts payables. These all affect cash. And then the last 4 rooms are going to work on how to convert your business cycle ideas to convert the business cycle, sales, make or buy, delivery, billing, so that you can invoice customers sooner and make a better business model for your business. Now, when you go to the breakout room, you're going to pull up a sheet. There's a worksheet that I believe it's in the chat room. You need to pull that up, and if you're assigned to room number 1, you go to page number 1 on the Google Doc. It's a spreadsheet which has prompts to help you through the discussion. Okay. Now, what we want to do in your chat room or your Zoom room that you're assigned to is you need to discuss with everybody what can be done. Listen to the prompts, work through the prompts. This is your best advice to your peers throughout this whole conference on how to improve your cash flow. That's what we're working on together. After we do that, you're going to work on that for at least 20 minutes. I'll be jumping in and out of room to make sure people are on task. And then you're going to come back and report. Now, in a room, someone has to step up and say, I'm going to lead the discussion. And one person needs to be the scribe or the note taker and put the answers in the sheet. When we're done with all of this, then we will have this document that all of this you will still have available to you, filled with hints and ideas to improve your cash. And from that, we're going to need someone to become the leader to present the results of all our discussions next week on the 8th. So I hope you all understand that. Any questions about that at this time? Everyone knows what they're doing. If you can kind of shake your head or something, let me know how you've got a good understanding of what's going on. Okay, Oksana, I think you can put them into their Zoom rooms.
Thank you, everyone. Now we're all back in the room. Sync, please unmute yourself.
There we go.
Let's go on with the presentation.
Yes. Thank you. I hope everyone has had a rich conversation, and besides getting to know each other, have come up with some suggestions. What I'd like us to do is just one by one, whoever the leader is for each room, just kind of come up and talk about some of the solutions, just quickly review some of the solutions you came up with. So let's start with room number 1, eliminate waste right now. Who is our representative from that room? And you can unmute yourself and tell us what you've come up with.
Roger, you were taking the notes. Do you want to speak to the notes, or I was more interviewing, or I can talk to the interview points? I guess it's me. Okay, so some of the things that we came up with, reducing waste right now, we're really just bringing in specialists in your service or product early on, and helping to identify quality issues, anything that in your supply chain might be acquisition holdups that would increase expenses, quality issues that are, product waste or return losses, stuff like that. Simple little things just to bring in an outside pair of eyes to help you minimize waste, loss from waste. Also bringing in, accountants and specialists who can oversee more efficient use of time and labor expense of your accounting processes, for example, making sure that you're not reworking mistakes.
Okay, thanks, Greg. One other thing that I'd like to add on this is taking your operating statement and assigning each line of the expense items to one person in particular to dig in and figure out where they're wasting money. Part of that comes from is the people who are actually doing the work might just be more familiar with what we're wasting than the people at the top of the organization. So those are some good ideas. Thanks, Greg, and that team. 1% improvement to revenue. So that was room 2. Can someone jump in, whoever that is?
I'll go ahead. Hi, everyone. I'll just run through some of the notes that we took. They're up on the sheet, but a few of us were a nonprofit, so we had a really interesting discussion in our group about, if there are those differences and what they can be, and if there are some short, small things we can do in the next 90 days that could apply to both for-profit and nonprofit entities. So our first thought was a membership program. So sort of like a cake of the month if you're for-profit, something like that, or a charity membership program if you're a nonprofit. Our next suggestion is renting out extra space. If you own a property and you aren't using space due to the pandemic, renting that out to other organizations that may use it. Our third idea was to offer extras to the services we provide. So if you're selling auto body parts, you also then offer installation if people want to come. Just adding little add-ons to the services you already provide. Expedited shipping if you're sending anything out, just for people to pay that little extra. Of course, there's raising prices on a single product or on something that you offer 1% to 10%, and then upsell. So Sink made the great point when he joined our group that you shouldn't leave any money on the table. And so we were thinking about people who are already in our space, already a part of our network, either current donors that we could upsell and ask just for a little bit more this year, or customers that would pay just a little bit extra for something.
Okay, thank you, Sam. On this idea and the next 6 rooms, this room and the next 5, the whole idea is to find a 1% or a 1-day improvement, not totally revamp your business, but get just a little bit more cash for what you're already doing. So a 1% revenue increase, and then a 1% COGS decrease, and a 1% expense decrease, and then a 1-day reduction in inventory, and a 1-day reduction in accounts receivables, and a 1-day pushing out of payables could net you $30,000 to $40,000 or more, depending on the size of your business, and you haven't really changed anything. So that's what this question 1% is about. How about this group, the reduction in direct costs? I joined on them. They get special privilege because I think they worked on 2 questions at once. So who's the reporter here?
So I'll get us started. We focused also upon the supply chain management and visibility. So our group consisted of owners of a construction company, a tea house, and a consulting business in diversity coaching, and the other one is a data scientist. So we had a pretty good challenge for us to talk about it, but things we agreed upon was supply chain management and visibility to achieve better efficiency and reduce the direct costs. So what that would do, by understanding your flow, you could reduce 1%. That combined with increased use of technology to reduce your time and travel expenses. Meanwhile, increase client contact and be more responsive to your client needs, as well as doing that, negotiate with subcontractors to better or slower payments for the goods that are being received into our business, so that we could increase the amount of cash on hand, thereby increasing cash flow for possibly 1% or a little bit above. So I'll stop there for anyone else in the group.
Okay, nice job. Let's move to the next one. 1% reduction in expenses. I think this is the group that did 2 rooms at once.
Yes, that's us. My name's Ivy Chuang. I'm the founder of Blendly. We're botanical skincare company based in Portland, Oregon. So our group kind of hijacked the room 1 worksheet without knowing. So it was kind of fun to realize halfway into our discussion. So we had people in, had a hair salon, and then insurance, and construction management as well. And then myself is in retail, and then also in nurseries. So that was kind of the mix, nursery landscaping business. And that was kind of the mix in our group. We came up with some ideas such as like buying things in bulk. So for items such as coffee for the office, you can buy in bulk and save that way, cost savings. And then the second idea we had was to pay quarterly or annually in advance for savings. A lot of expenses have that. If you pay monthly, the costs are higher, but if you pay annually, then there's savings that are offered in the long run. And then utilizing technology to save on travel expenses. One of our folks has started conducting interviews over Zoom rather than spending money and time on gas and traveling and interviewing for positions that way. So decreasing store hours, this was my contribution. I evaluated data on how many customers we were servicing in person and whether or not I can shrink my operating hours a little to continue to serve our customers well, but cut down on our labor costs. And then this was an example about examining what you're paying for already and whether or not you're actually utilizing those things. So if your company has, whether it's 5 phone lines, 15 phone lines, just to examine exactly what your company actually needs to operate and saving there.
Great. Thank you, Ivy. I hope you're seeing from the 3 rooms so far that we're not talking about major things to fix, just little things that add up to a lot more cash. That's the whole emphasis of that. So let's move.
I just wanted to do a quick time check. We have little time left, but the next session is not until in 15 minutes, so we could overstay our time if we wanted to. Just let's be mindful of time.
Okay, let's just cruise through here. There was a group on decreasing accounts receivables, and the idea is this is the money that shows up on your balance sheet that's your cash that someone owes you. They haven't paid you yet. So what are things you could do to move that in one day sooner that people pay you? So go ahead, whoever had this group.
I think this is Sion Tesone, and I will share what we found in our group. So the first thing is to give discounts based on prompt payments, like discount if they pay within the first week. The second thing was to offer payment options and different method of payments of terms, such as up to pay. The third thing was charge a fee for late payment. The fourth thing was send out more frequent reminders, automate this process to save time, be gentle professional reminders. And the last thing is, if charged 90-day subscription, give a free week per 90 days.
Okay. All of this just moves that accounts receivables just a little bit, but it drops some of that profit right down to the bottom line, that into the bank account that you can spend.
Yeah.
Again, that's the idea. Great job, Sion. All right. How about getting a one-day decrease in inventory? Who had that group?
That actually may have been group 7 if no one else is going to answer. And we actually answered question 1 because we couldn't get any other spreadsheets. So we thought we were on question 1. same thing. So,
Okay. Have we kind of covered some of your answers already?
well, actually, our team seemed like we've answered every single question so far in some
Okay.
sense of the way. We didn't talk about this one though.
So I'm just going to talk a hint here is inventory is money you've spent on stuff that you don't have access to anymore, and you can tie up a lot of cash in your inventory and have too much inventory or dead inventory. So I've had a client that, you know, they sold consumer products through the internet, and they had a whole bunch of dead inventory that no one was going to buy again. But the owner was sitting there going, well, you know, we paid for all this. We've got to sell it for what we're going to get. And finally, some of his staff was able to convince him that money's gone that you spent on buying this inventory. Can't we just have a garage sale on this stuff, and we won't get as much as we put into it, but we'll get $100,000. And in fact, that's what they did. They had a fire sale basically on the stuff they knew wasn't going to move. Someone wanted it. They got $100,000 worth of cash, but it was just sitting there, not moving. So that's this idea about, you know, only having the right amount of inventory. And then next thing, 1 day slower in accounts payables. What committee had that? Okay, no one's stepping up. So on this one, basically is your balance sheet shows how much you owe people. And hey, you've got to pay your important vendors. You got to pay everybody, right? But pay them maybe a little slower where they're still going to be happy, but you get to hold on to your cash a little longer. That's one of these things is there's always this urge to pay people immediately after you get the invoices. And there's certain people you do want to do that with, but there's some people you don't need to do that with. So thinking about slowing down accounts payable by 1 day procedures, that's what that would be. I'm gonna take some facilitator's prerogative and walk through these through what the idea is here. The next 4 committees were about the cash conversion cycle. And ultimately, the cycle of how you do business. How does, from the day you start trying to sell something to the day you collect money is a certain amount of time. If you can shorten the amount of time that takes, you get to invoice people and you collect it faster. So even though sometimes this doesn't seem to be a cash issue, in the area of sales cycle, you need to examine ways to speed up the sales process and eliminate mistakes that you're making in the sales process. Take steps out of the sales process that aren't necessary. Maybe we change the order of the sales process and get some money up front. This is about changing the model. So I tell everyone, look at your sales cycle and map that out. Do you have to have all these steps? Why is it going slow? The second thing, all businesses make or buy things that they produce, that they sell to the customers. Even service industries, you provide a service, there's work that goes into doing it that takes time. Can you figure out how to do those things faster? You get to invoice faster. Finally, the last, or the 2 things, is the delivery cycle. Okay, you've sold them, you've made you're going to give them what they bought. Now you've got to get it in their hands. I've worked with a software company. Now this is an older company because it's a little different these days, but it took the sales process was pretty good. They customized the software rather quickly, but the delivery of the software and the installation of the software in the company took 6 weeks because they just couldn't get their calendars together. And the software would show up on one day and the computers another day, the trainers show up a week later. no one was ready. They just spent some time coordinating that, and they went from 6 weeks to 2 weeks. That's a lot sooner they're able to collect their money. Finally, speeding up the billing cycle. Most people think of this first on getting more cash. Again, when you're billing people, think about things you can do to eliminate mistakes in your invoices. Think about things that make your invoice come to the top of the pile so that they can pay them faster. Maybe have someone work on building relationships with all the people that pay you regularly, because the accounts payable clerks are among the most ignored people in the world. No one pays attention to them except when you want money, and they tend to get beat up by people saying, I want my invoice. So I know of a company that just put one person, actually someone who is a former salesperson, not an accounting person, on accounts payable. And she built relationships with all the people that paid us regularly, and they welcomed her call because she helped them get their invoices off their desk and that accounts payables work done. So these last 4 are about changing things in how you do business. We split up first immediate things, then something in 90 days by looking at the numbers in our P&L and balance sheet, and how can we improve that. Finally, let's dig into how to, operating more efficiently or changing our model or doing things differently that allows us to invoice quicker. There's no real one answer to improving your cash flow. It's a lot of different things. Now, before we're done, what we need is someone to, all the ideas are posted in Google Doc, or if you haven't posted them, post them in the Google Doc before the end of today. Next week, on the 8th, there's a session where all the think tanks are coming together and reporting their major findings. So we want to have a report out, and we need someone to go over all the ideas and make a quick 5 to 10 minute report to everyone else in the conference on the best ideas we came up with. So
and we have 2 volunteers. One is Kelly Carpenter from P&W Cookies, and Greg Palmer from GPI Financials.
You guys, thumbs up. Thank you. Well done, team. I know this was a little confusing jumping in there, but we got some good answers and some good practical answers. What I do want to leave you with is, again, this cash is king. Revenue is vanity. Profit is sanity. But if the profit doesn't drop down to cash, you got a problem. So cash is king. And that's what you guys came up with, ideas in these 3 areas. And I want to encourage you to dig into this regularly to build a strong balance sheet. So that's our session. Thank you for being patient with me. I hope I didn't create a process that was too confusing. I hope you made some good friends and connections, and give me a call or reach out to me if you think I can be of assistance.
Thank you so much, Singh, for wonderful facilitation. And thank you for everyone who joined the session. We will have now a choice of 3 different sessions in 5 minutes. You can join Leading in Turbulent Times with Dr. Linda Applegate, Breaking Through with Dr. Susan Perkins, and Becoming a Made in Business with a panel of practitioners and small business owners. Thank you so much for joining, and enjoy the conference.